What's going on, ladies and gentlemen? Welcome back to the channel. We are talking about Redbox here in this video because yes, I do still think there's a lot of potential opportunity with Redbox, and I kind of want to talk about some interesting things we're seeing on the exchange reported short interest data and what has happened over the last day or so, because last night we were not on the threshold securities list. Now we're back on the threshold securities list. The short interest has went up about 4% overnight. Cost to borrow has went down a little bit, but at the same time, the short percentage of free float as of May 31st, which was not too long ago, was actually 209.48%. I don't remember actually seeing a print for that. So on all regards, you know, the ortex data, these live short interest changes, they are only an estimate, and we just got a almost 210% short interest print. So I think it's in that ballpark. I think it's probably around 200% short interest, and that is very, very exciting. I want to talk about the warrants. I want to talk about everything else that you guys need to know about Redbox here in this video. Hit the like button, subscribe to the channel, source those comments, questions, or concerns down below in the comment section. And yes, we will be live in between 8 and 9 p.m. Eastern Standard Time here tonight. I have some more real estate stuff that I got to do tomorrow, some rental property stuff. So if you guys want videos on that, more real estate stuff, let me know down below in the comment section. But nonetheless, let's dive into this video. So what did Redbox do for the day, and what is really going on with this stock? Like, let's be serious here. I think it's pretty clear what's going on. But Redbox was down about 4.63%, down about 2.53% here and after hours. Considering the move that we have seen over the past couple of days, this is only a relaxation, right? We're still higher than where we have closed any day besides yesterday, right? So we're still higher today for the close than any other close we've seen besides that close yesterday. So it's still extremely bullish. Where we are currently at, I think is a great thing. Where the RSI is at 66.41, you know, it's not too overbought. You could see a continued you know, move to the upside, in my personal opinion. The MACD is bullish, but not like extremely bullish. Like, nothing is, you know, jumping out at me saying this stock has to get pushed down lower, especially when it has a 200% give or take short interest. That's a big problem for a lot of these hedge funds. And kind of what I find very interesting is the exchange reported short interest data. So if we go ahead and actually take a look at this, so it looks like we've seen hedge funds just slowly but surely acquire a short position against this stock. September 30th, 2021, you only had 183,000 shares that were actually sold short, and then every other reading we got was higher than the last one, and it's just been climbing. But I think it's very interesting how it's climbing, right? So pay attention to this right here. The exchange reported short interest data for the day of April 29th, you had 2.52 million shares that were sold short. The short percentage of the free float was 90.92%. Well, the next settlement date, you were exactly 1 million shares greater sold short, and that was at 3.52 million shares, and that was 181.04% short interest of free float. And this is really what had gotten a lot of people's attentions, was the 181%, you know, sold short. So now I do think we're over 200% short interest, but look how it's going up. Pretty much every single call it time we get this exchange reported short interest data, it goes up usually by about 100,000 shares typically in the past. And then you just get a 1 million share increase. Typically that does not happen unless it's one large hedge fund or possibly a couple hedge funds. But this is not a trade I think that a lot of hedge funds are a part of. I think this is really a trade that 1, 2, 3 hedge funds, probably at the max, just got caught on the wrong side of. And I think that's really the way to look at it, and I think that's what the exchange reported short interest data over the timeline of what we've seen, you know, the past weeks and months, I think that's really what supports this claim. You know, after all, there is only about 3.5 million shares that are actually sold short. But now when you have numbers like this, when short interest is even increasing as far as the estimated short interest. On last night's live stream, the short interest of free float was 173.49%. Well, here today it's 177.42%. So it's up about 4% overnight. And when you have this high short interest and really a lack of shares outstanding with a lot of retail activity, it's hard for shorts to get out of those short positions. It's very, very hard. And now they're paying a massive cost to borrow number. Even the cost to borrow minimum is 851%. The cost to borrow average 853%. If we go ahead and look back at the cost to borrow minimum for yesterday, that was only trading at 676.91%. Cost to borrow average has pretty much stayed the same. Cost to borrow max went down about 100%. It was over 1,000 as of last night. But that cost to borrow minimum, I think that's more important than not, that's lined up with the cost to borrow average, and the fact that we are now back on the threshold securities list. I think that does pretty much guarantee some degree of, obviously, shares being returned, right, with the IOUs. That's why it's on the threshold securities list. So I do think you'll see some buying power in that aspect. But even given the warrant situation, right, we know about the warrant situation. If we look right here, it said Redbox filed a S1 statement in which it says that the stock stays at 18 for 20 consecutive days. They will exercise the warrants at 18. You can find that S1 filing if you go to www.sec.gov, put the ticker and it's come up. And this article does go on to say that if Redbox did exercise those warrants, it would still have a smaller float than GME, which is good to point out. But nonetheless, the stock has to stay above 18 for 20 consecutive days. And, you know, we're at $9.47 per share. So it looks like, in my personal opinion, when I boil all of this down, specifically what you're seeing around these prices as well, and kind of how we want to break out, we want a 100% day, but we're not quite getting that. I think it really boils down to this is probably going to be something that is controlled. And I know controlled is like such a bad word to use, I guess, if you're talking about a squeeze trade, but I wouldn't look at it that way. What I mean by controlled is you're probably going to see this thing rally when you least expect it. I think right now, these guys that have their, short positions on, even the market makers, right, broker dealers, they kind of want you to get out of the trade, right? Obviously, they want you out the trade so they can make more money or essentially not lose as much. So I think they're waiting for some of those options to actually expire, and I do think they're waiting for a little bit of retail capitulation to ultimately send this thing up flying, and then they're obviously going to scam you when the stock does go up 100% in a day, like I think it very well could, and I think it could be in for an even bigger run than that. But I do think the timing of this can be somewhat controlled, and I just think they want less attention on the stock, and I think they want you guys to get out of your positions. That's only my thought. That's literally only my opinion. I don't really have anything else to back up that opinion, but that's what it looks like as far as why we are seeing the price action we are. Like, we're not breaking out when it looks like everything is very much sufficient to break out. There's only about 4 million shares that roughly can be traded, or is it 2 million? Doesn't even matter the exact number there. It's very, very low, and you're still seeing volume that is pretty damn high. I mean, yesterday you've seen 53 million shares trade hands. That would be like 25 times the float. Or even today, 14 million shares, that would be 7 times the float. Usually if you see these kind of ratios on other stocks, the stock would be going up, right? So I think that's the overall consensus that I do have on that situation. But on a technical basis, it still looks beautiful. It looks like you're just one, report away, one piece of news away from going a little bit parabolic there. And especially if that merger does not go through, if they can find a way out of that, that could also be a very bullish catalyst for Redbox. Now let's go ahead and take a look at the option activity, because the option activity suggests exactly what I'm saying. You can see a lot of these calls that are coming through: $4 calls, $5 calls, $8 calls for $712,000, $4 call for expiring June 17th. Pretty risky position overall. Break even of $9.90 per share on that trade right there, and that's basically what you're seeing across the board is very large trades on Redbox. So I think even potentially, you know, the hedge funds with short positions also want to have some call exposure as well to try to hedge out some of that risk, and I think that's kind of a recipe for disaster either way it goes. So on one hand, maybe it's controlled, maybe it's just a couple hedge funds with large positions, and maybe other hedge funds are trying to squeeze them out. It's really hard to say, but I do think this culminates into higher prices that we are currently looking at. Now, this is not something to get confused with. You're not buying this at the low. You're buying this potentially right before it goes through potentially a parabolic rally. So with trades like this, relatively speaking, you want to keep them pretty small because you never know what is going to happen, but a small amount of money could turn to a very large amount of money. For an example, if in theory you had a $10 call and the stock goes to $100 per share, which we've seen in the past, and even back in February, we had a stock do that on us. Inspirato, I believe it's the name. It went from like $12 in a day to $108 intraday. That one option, that $10 call, theoretically, would be worth about $9,000 in the money. So, you know, if you can get those contracts for a reasonable price, you know, $100, you're going to make a lot of money, but you don't necessarily risk a whole lot of money. That's one of those high risk, high reward kind of trades. You don't want to go into this thinking this is your $1 million ticket, but also at the same time, it could give some pretty nice gains once that day does come. And once they got to get out of their short positions, that's it. When it comes down to it, that cost to borrow rate is unsustainable. And what you're seeing on the daily change for the cost to borrow minimum is very telling in my personal opinion. Like nobody's lending out stock for less than 850%. That's just a wild concept. You're paying out massively for those short positions. So that is pretty much going to be all for this video. That's what you guys need to know for the day. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Get your free stock with Webull, Moomoo, and Public down below in the description of this video. And if you guys want to trade with me live in real time, also link down below in the pinned comment. Thank you guys for watching. I will see you in the next one.